Hello, everyone. Thank you so much for joining. My name is Dominique, and we have the rest of the Greenleaf team here with us today. We have our hosts, Dave and Josh, and helping drive this live stream, we have Natalie. We're going to start here now and get this thing rocking and rolling. So first off, we always like to provide the partnership with an explanation and really be transparent, direct, and informative in our mission here at Greenleaf Connect. Our effort is to provide the partnership with as much knowledge and answer any questions that you may have specifically regarding your investment portfolio here at Greenleaf. We do this in the format of live streams, which is open to the public, and private Connect events are more for smaller audiences like our team members and smaller groups. So before we dive in here, we would like to provide you with some topics of discussion that we will be speaking and addressing on today. We will really start off with some changes from the fourth quarter. We'll dive into occupancy and reserves, and then we will break out into that Q&A session. This is a friendly reminder that located at the bottom of your screen, you can use the Q&A feature to submit any questions you may have. This is your opportunity as you pull out your cover pages released January 20th. To really dig through any of the financials. And if you have any questions, this is your time to ask them. All right, without further ado, I will pass it to our hosts, Josh and Dave.
All righty, thanks, Dominique. Welcome, everyone. We got a couple points here from the fourth quarter that we thought were relevant, kind of impacting the majority of our deals when we go through these. But this overview is covering what we're calling commercial, medical, office, government, or mixed tenancy buildings. So an example of that is the VA clinics that we have. Those are government backed. They're also medical. They're functioning medical clinics. So it kind of covers a couple key areas when we talk about a VA clinic. And we have 3 of those now?
We have 3 of them, working on buying the 4th.
The 4th is in Norcross that we're looking at, right?
Yeah, North Lake Mall area in Atlanta.
Yeah.
Yep.
So here, the other 2 are two VA clinics in Raleigh and one a little south of that, which is Summit. The other deal we have is this, what we're calling, it's a North Carolina Rate Bureau. So this is a state agency setting insurance rates. So it's like quasi-government. It's an office that's there. So another example of something that's related to these fields that we're calling commercial as a whole. So positive note overall, we have no COVID related payment issues. We really only had one from 2020. We had one bar that maybe it was COVID, maybe it was more operator issue. That was back in the beginning, and we had a publishing company that vacated a big chunk of their space, but other than that, we've had no COVID related anything currently happening, which is very positive.
We had that one tenant at Parsons that had a COVID back payment that is now caught up and made her full payment. So that was actually very positive as well. The seller gave her, I think it was 3-4 months of free rent and gave her the opportunity to catch up, and the catch up went 100% to us. So worked out pretty well.
Yeah. Our publishing company that left, we backfilled them with a longer term lease and a bigger company. So positives on that leasing effort. So on the medical front specifically, our leasing here has been very strong. We only have 3 vacant suites across everything we have in the medical space. On office, the area that has been slow, when we look at office, the Station, Lupton, and North Grand, these are all pure open spec spaces. So like at the Station here, and many of you investors have been in the Station that we don't have anything built out in these spaces. Those have been a much harder to lease. That's really the only thing that we've had challenges with leasing. All of our small office footprints under 25 square feet we're leasing actively.
Right. And tie that together is a lot of the smaller footprints are built out. They're move-in ready.
Right.
And we're finding that's like smaller office tenants that, that have these small footprints under 2,500 square feet. They want to move now. Like they want to be in it. They want to basically look for an office and be in within 30 days. Yeah. So they have to be ready. So
no, when we've signed our first office lease, it came with the notepads, it came with the pens. We're like, this is perfect because we don't have any of this stuff. Chairs, desks.
Whiteboards.
Everything. We're like, perfect. We can move in here. We don't have to do anything. So a lot of our office space that we have that fits into that, people are moving in quickly. We Placer data. We keep talking about Placer. Last year, we really jumped into this, making data-driven decisions on how we approach deals. And we have a couple key points in place that we've either mentioned in the past or stuff we're constantly tracking. And one of those is 191 Peachtree. It's a tower in Atlanta. It's one of the most prominent buildings in Atlanta. Josh and I frequently go in there. We had it for our attorney's offices there. When I worked at Deloitte, their office was here. So it's a recognizable building, and we're looking at their usage, and they're still down about 40%. So pre-COVID, they had about 160,000 visitors a day that were coming through there, or 160,000 a month that are coming through there. And now it's down, it's still down 40%. So we're keeping track of that. Our properties we have on the commercial side are back to pre-COVID levels of, remember, this is cell phone data tracking who comes in and out of a site. Ours are back to pre-COVID levels.
Right, and this Placer data has been incredibly helpful as we look at deals. Some of the government agencies, depending on what the headline is, whether they're work from home or actually going to the office, before we even look at the deal, we'll pull some Placer data to, like this NC Rate Bureau deal. It's just a standard office for insurance rates, but it's 26,000 square feet. They have hundreds of people that work there. And we're able to look at the Placer data before COVID and post-COVID just to verify that they're still using this office space, that when their lease comes up for renewal, they need it.
They don't plan to just vacate because there's no one coming to that office.
So it's been incredibly helpful to just validate that there has been no strategic shift for either a government agency or really any of our tenants.
Yeah. And roughly our portfolio is just over 800,000 square feet of commercial, and we're just under 80% occupied. So when we look at our occupancy as a whole, you can see we've steadily been growing since the first quarter of 2020. Really being led with small office rentals and medical. When we look at our deals below here, we have them broken apart between office and medical, and you see the two numbers, 1830, 1824, that's medical clinics. So everything on the right side, when you're looking at this, we've had occupancy gains, pretty much everything. We leased a medical space at Parsons, 6160 has leases that we've been signing at it. And then on the office front, the station and Johnson Square both continue to add occupancy, predominantly with those smaller tenants. Johnson is almost all, our largest tenant at Johnson is about 10,000 square feet. The rest are all smaller footprints, really maybe 4,500 and smaller, right?
Yeah, the station and Johnson and the crossings, those three on kind of the right-hand side of the left chart are all very similar type of tenants. And you see that they've all had either stable or occupancy gains quarter over quarter. So we're very excited to see that.
Yeah. All right, this is the good part too on reserves. So we're just basically just assessing how much cash we have and are we making distributions. If you look at the chart and you see 100% and it's green, that means we're making distributions, and everyone would have gotten a check there. Everything went out not quite December, January 20th. So all of our distributions and our reports went out January 20th. We're going to keep that trend going each quarter. So on the 20th of each following month at the end of the quarter, you'll get your distributions and statements. And then we've got 3 deals on the medical side, on the right-hand side here, that are just below, right? So,
and specifically, if we talk about 6160 and Johnson, these are 2 big kind of lease up construction projects that go through these ebbs and flows of cash management. We basically have to renovate, pay all the bills, then go to the bank and ask for basically them to draw up our loan to the balance that we projected. So in that kind of transitionary model, that transitionary period, that we're at a lot of cash. So you'll see that Johnson, specifically Johnson, because it's so many moving parts, you'll see that number ebb and flow pretty heavily based on the timing of the end of the quarter and where we are in the construction project.
Yeah. So in that reserve plan there, Johnson has a lot of cash on the books. So we're in good shape when we factor in that we are doing a construction project that's there. And then Lupton, 1500 North Graham, the station, these QOZ deals that really went in and we finished. We haven't gotten to really a strong revenue point yet, and all of those are up for like, can we refinance those? What can we do with those going forwards on the debt side? Yeah, that's it. That's it on reserves. So we kind of went through occupancy, touch base where we are. We went through reserves. Now we're going to jump into Q&A and hopefully answer any questions you have on how deals are operating, what we're seeing specifically in different markets or different cities here, and hopefully get everything answered for you.
I have lots of questions for you guys today. Okay, so first we're going to start with our refinance questions. So do you have any refinance plans for the commercial properties, specifically like the 1500 North Graham, the station, and the Lupton?
So those three, yes, right? So those three QOZ deals, we will refinance them. And it's just a matter of ensuring that we have one, Lupton and North Graham need to have some tenants and some revenue so we can do those refinances. In the station, we really need to finish out the leasing so we can get a better rate.
And specifically, if you look at Lupton, we've been held up supply chain issues. I know everyone's heard that. It's a kind of a overused excuse, but you know, we haven't been able to get our windows in, and they just got in. So that project should start picking up, and we can get more aggressive with pre-leasing. We move over to 1500 North Graham. We just changed leasing brokers. That project's relatively newly delivered. So the timing is really now to get going on that one. And then at the station, you know, we built out some space pre-COVID. It's really not the market. The space that we built out is not what the current market is in demand of. And so we're looking at basically retrofitting that space to be more post-COVID friendly.
Yeah.
So we're gonna build out one of those suites that our office is going to move into, because we do it at a lower cost because we're less demanding than a standard tenant. And then we'll backfill our current space with a new tenant that's fully move-in ready. So that should help our occupancy pretty quickly here over the next quarter.
Yeah, and the debt on commercial is very tied not only to revenue but occupancy.
Right.
So they want to see that we have that higher occupancy. So that's what we're going for on the station.
Our next question is on interest rates. What is the blended interest rate for commercial?
Overall, I mean, pretty much every loan we have is below 3.5%.
I think we have two at 4.1. I think we have four that are between 2.6 and 2.8. And then everything else is kind of in that 3.1 to 3.5 range.
Yeah.
Those are all the questions we have on refinances. Next, we'll move on to sales. So do we have any pending or future plans for sales?
Not at this time. Everything we have is targeting a longer hold period. So we have a good amount of time left on everything. We're looking at medical. I mean, medical cap rates have really come down.
Yes.
Right.
But it's been a lot harder to find medical deals. When we were buying them kind of late 2020, you know, we're buying in the mid 7, even pushing 8 cap rate. And now we're not really seeing anything above 6.5. So we're kind of keeping a close eye on, we're trying to buy more opportunities, but also if there's opportunity, you know, if there would be an opportunity to sell at an advantage cap rate.
Yeah. So we're listening.
Yeah.
If something comes.
Right now, yeah.
In short, we're listening, but no real focused plans right now.
Right.
So.
Okay, those are all the sale questions we have. So moving on to some operational questions. Can you give us an update on Palmetto and where we are with CapEx and operations?
Yeah, certainly. So this one, you know, this is one of the earlier commercial buildings that we bought, and we did this one in the middle of COVID as well. In Anderson, South Carolina, we were one of the first owners to use their new and improved online permitting process. So we were the guinea pigs, and that took us, we should have just done it on paper. It took us an exceedingly long amount of time to get that done. And again, it's not really an excuse. It's kind of an annoyance that it took so long. And that's why when you look at our cover sheet, you see a lot of the CapEx was pushed into 2021 from 2020, because we thought we'd be able to get this stuff done in 2020, and it bled into 2021. So we're finally done with all that stuff, thankfully. And we have everything that's full right now. So we're in a good spot there, but we have to earn up our reserves. That's why there wasn't a distribution this quarter. But we are very close. I think when we look back on that reserve chart that we showed, we're like 96% of our reserve threshold. So we're in a good spot going forwards, and we should be able to make continued distributions going forwards on that one.
Our next question is on Parsons. How is leasing going there, and why was the 7% pref not distributed this quarter? Leasing
is actually going well. We had a physical therapy group that expanded and took an additional 2,000 square feet at Parsons. When we purchased it, we had 2 vacant suites, right? So we had 2 vacant suites when we purchased it. We finally leased the one. Took us about a year to go through that leasing process and get the expansion put in there. So now we only have 4,000 square feet left. But on that lease that came in, the reason we were slightly below our pref is because we were below on our reserve total. And although we were close, we still paid 6% commissions on the total lease that was there. So we're paying, most times the tenant has their own broker that we have to pay, and we're paying 2% to them from the length of the total lease. So we have a 5-year lease. That total value we got to pay 2% on, and then the leasing broker we got to pay 4%. So we had some significant costs that hit in the fourth quarter because of that. It cost us overall about $30 a square foot, just over that, to complete the lease, and that included some concessions that hit. When you look at the Parsons revenue chart, you'll see a drop in that. That's because the tenant that moved in, they got a month of free rent. We also gave them some TI, and we had to pay the leasing commissions. All that total added up to about $30 a square foot for that tenant.
Right, and that final space is roughly 4,000 square feet. They vacated pretty close, right after we took over. That space is worth about $80,000 a year of revenue. So that we are hunting out there trying to find the right tenant for it.
Yeah.
And it's a great spot. It's really right when you walk in the door, the first suite on the right. So
yeah, I mean, we leased one, so now we're just knock out the next one, lease the next one we have.
Okay, our next set of questions have to do with the station. So first, can you give us the status of cash flow and leasing there?
So leasing, I mean, the station has a lot of these smaller office suites, and those have been going well. Right, we've been able to lease those. It's really just the suites that we renovated and opened up the whole floor plan that we have not been able to rent. Josh mentioned, us building out one of those suites so we can move in there and release the space that we're sitting in right now. But cash flow wise, until we're able to do that, or able to lease one of those spaces, we're basically at like a break even minus CapEx. So that's not a great cash position to be in, knowing, hey, we're simply just breaking even each month. That's not the goal. But at our current occupancy, that's the reality that we are in. And we don't really have a lot of CapEx dollars to spend until we go do one of those build outs.
right. And those build outs, there's 3 suites. They're roughly 8,000 square feet each. So it's about 24,000 square feet on our 110,000 square foot property. So give or take 20% of the property needs to kind of be rebuilt.
Yeah.
And speaking of the build outs, what's the timing to retrofit the station's available space, not just the space Greenleaf will move into?
Well, it's a hard play of, are we going to go build out that space prior to having any leasing prospects? We were hoping that we could be like, get someone, hey, I'm interested, and we draw it up and build it out for them. But if we have to go do that on spec and kind of go back to what we were before, we were going to work on getting through our own part of it first before we did that with the remainder. We're going to do about 8,000 square feet when we do the specific build out that we're looking at. The remaining, because it's basically just 2 other floors, we have to address after that and see how this first one goes.
We'll now move to Johnson Square. When do you
Right.
expect Johnson Square to be fully leased up and consistently paying distributions?
Fully leased. So right now we're in the middle of the construction. So if you recall in our previous updates, June of 2021, we didn't have any new active leases going into June of 2021. So we said, okay, we are going to stop offering TI packages, and we are going to shift to mechanicals, replacing everything that was there, painting the outside of the building, redoing windows and doors, and cleaning everything up. We are on the tail end of completing all that. And now we have a much prettier project. We should send out some pictures of what it looks like now that it's almost fully done. We'll get some of those out too, but now we have that, we're gonna go back to the leasing front because we have a better looking product to fill that out. So if we fill that out this year, that would be, and that was in the business plan too, was to do that, was to kind of take a hiatus on interiors and work on the outside and spend 6 to 9 months fixing that stuff. So that was the business plan all throughout. And now that as soon as we're done with this CapEx here in the first quarter, as Josh mentioned too, we got to draw up our bank loan to reposition it. We're trying to do that as conservatively as possible so that we're not taking out more debt than we need, but managing that appropriately. So in short, we wrap up the CapEx in the first quarter. We get our construction draw completed going into the second quarter and then make distributions going forwards.
Next, we'll move on to Summit. Can you give us more insight into the property's performance and distribution plans?
That one performed pretty well. I have to look at a little bit of notes on that one.
It's 100% occupied.
Yeah, 100%. And I'm cheating and looking at our cover sheets here so we can remember the numbers instead of making them up. But our available cash at the end of the quarter was 282 and our reserve goal is 220. So we paid out, 10.5%, which was over our pref for the fourth quarter. So we paid out more than was owed in the fourth quarter, but we're not caught up for the life of the deal. For the life of the deal, we owe 135 and we've paid out 78,000. But now we are 100% occupied. We are done with all CapEx and we're in a position going forwards that our reserves are met and we'll be able to continue making distributions in the quarters going forwards.
And this is one of those deals that wasn't necessarily a deal that would earn the 7% day one. This is a deal that had good amount of long-term leases in there that in order to get to basically our true earning potential, we needed to wait every year for those 2-3% escalations to kick in with the leases in place. So to get to a full distribution here, which we call 7%, it's probably going to be 3-4 years down the road, which is what we projected in the model, to wait for those long-term leases to hit their escalations.
Yeah. And you'll notice on Summit too, the chart for revenue, we have a pretty big drop in December, and there weren't any issues there. It was just a tenant that paid late and it didn't hit the December book. So it looks funky on the cover sheet. And it looks like what the heck happened? Revenue plummeted. That's not the case. They just paid in January. And then when we go to January, we're going to see a spike starting our 2021 reporting based on the time of their payment. And we'll be explaining that one again as that comes up for the next quarter. So.
Our next question is on 1500 North Graham. How is that project going?
Well, it was going really well. We completed all the renovations. Property looks really cool, but we need to have some tenants. So we recently switched leasing brokers there. So we went with a new leasing broker there. We're hoping that helps. We have a new listing package and we lowered our rents a little bit as well to make sure we were lower than some of the surrounding properties that have also had leasing momentum and they've signed leases. So we moved below that and we feel like that will help in the first quarter here. So we're going to optimistically see kind of how that goes.
Our last set of questions are on the Lupton. Josh, you mentioned earlier that the windows are in. So the status of the windows, they're being installed or have they already been installed?
Yeah, so being installed, we received them, which took us about 9 months. And now that we have them, it's more, now we got to go put them all in. I want to say there's 330 windows that are there.
Call more than your house, right?
A few more than my house, but it's going to take a little bit to get those in. So we expect that to take basically a month to get the windows put in. And then from there, we have our interiors built. So we got the floors in there, they're spec'd. And now we at least have an option that we could provide. When could we get a CO for a tenant? It's hard to lease a space knowing like, hey, we have to change the windows. We can't get a CO until we do that. That makes the leasing process hard. So now we feel better that we have some definitive answers on that. And hopefully that helps. The location, Chattanooga has been hot. It's had great rent growth across really commercial and and the residential side. It's had great rent growth there. So we're optimistic about the location and starting to make some progress on leasing, but we're definitely behind from where we want to be.
And do you have any anticipated timeline for getting CO?
The completion of the windows enables us to get our CO.
Okay.
So we have a building CO, and then we have to have a suite by suite CO as they build out their suites. So we have a couple CO pieces that we have to get there.
What just spend a little time on about the Chattanooga market. We talked about TVDC earlier, that we had that turnover with
The publishing company.
The publishing company, and
Yeah.
basically immediately backfilled them with a logistics company that's been in the space. We're in the process of negotiating a deal there that we've had under contract for a while, and just going through kind of the final parts of negotiations. And they've leased just under 100,000 square feet to multiple tenants this year. So
Yeah, and that's a mix of office, quasi-government, medical, kind of a mix of them, mix of the tenancies.
Of all the markets that we're in from an office standpoint, Chattanooga is actually one of the tightest, because there is so much demand to be in that city. If you're a professional business, there's only so much professional office space. So we're very bullish on the Chattanooga office market. We think the Lupton will fill relatively fast once we finish going.
Are able to do it. Yeah.
Yeah.
Yes. That one's been, it's been stressful on the Lupton, knowing that it keeps getting delayed. So
What will the Lupton lease for compared to TVTC?
we have the Lupton in the mid-20s. TVTC is in the high teens. But it's a very different, they're relatively close, or about 2 miles away from each other, but they're very different. The street that the Lupton, for example, TVTC is gated. It's 1 and 2 stories, and everyone's driving there, and you're kind of like secluded. The Lupton is more walking. The street in front of the Lupton is painted with like a million different colors. And it's one of the only avenues in the state of Tennessee. There's only 3 roads that have open container allowed. And it's in the front of this, and it goes to a big concert park that's right there. So very different vibe, even though they're only two miles apart. So totally different kind of asset positions there.
And our last question, still on Lupton, is there any potential of getting historical tax credits here?
Yeah, we've talked to some people about that. We are working through the tax credit process. What that would enable us to do is, the building was built in 1908. We've preserved as much as we could throughout all the construction. We preserved all the wood beams. We preserved all the brick. We preserved the stairs. We've saved everything. The windows we're doing on the outside match aesthetically to what was originally there. So we've done a good job at doing all that. We've maintained all the hardwood floors. That was really the look we were going for. But because of that, we do qualify for the historical tax credits. So we're trying to see how much funding we could get from that. It's going to be somewhere between $900,000 and $1.3 million roughly that we can receive in historical tax credits that go back to the partnership.
We had one more Lupton question come through. What will the Lupton lease against the comp, same or lower?
Well, for the comps that are directly in that little Miller, it's next to a park called Miller Park. For the comps that are right in their area, we're only aiming to get what the market is. We're not trying to do anything substantially better than what the market is there. There's a innovation and tech center that's right next to the Lupton, and their rents are higher, but it's not necessarily, it's not like a fancier tech place. It's just, they said, hey, we're only going to lease to startup tech companies. They like burning money. So
Right.
I think that's maybe why the rents are higher there, but we're not trying to do anything that's crazy. We're just aiming for middle of the road rents on that.
Yeah, and that's really low to mid 20s, like $22 to $25 a square foot.
Yeah.
Okay, well, those are all the questions that we had come through. We will stay on for a moment in case you have any last minute questions that you can submit through the Q&A feature at the bottom of your screen. We'll turn it back over to Dominique.
Okay.
Yes, thank you so much for joining, everyone. We do invite you to our upcoming live streams for our industrial portfolio and retail portfolio, starting here at 3 p.m. Eastern and 4 p.m. Eastern. Those both are about going to be 20 to 30 minutes or so. So even if you are interested in these asset classes as a whole and maybe don't have a particular investment in those specific asset classes, we do encourage you to join. I will go ahead and share this link. Natalie will go ahead and share this link with you all. Again, this is a friendly reminder that this live stream was recorded and will be shared with you by the end of the week this week. This does conclude our broadcast today, and we certainly thank you for joining us, and we hope to see you soon. Take care, everyone.
Since we're still online, we had one more question about the lease comps at Lupton. And so what is the current lease level for the Lupton comps?
What is the market occupancy in Chattanooga? I guess we could.
It's pretty high. Is that the question? Is it?
What is the current lease level for Lupton comps?
Yeah, so that sounds like market, if we're talking about market occupancy for Chattanooga.
Yeah, for the downtown area, it's really in the high 90s. I believe it was like 96, 97%, like basically full
And
for all practical purposes.
I think in 2021, there was only like 40,000 square feet that even came online in the market.
Right.
So Chattanooga is, there's not a whole lot that's coming online and there's not a whole lot that's available.
Right. Downtown Chattanooga has a lot of older historical buildings that over time have changed use from residential to hotels to office buildings. And, there's not a whole ton of purpose-built office buildings I guess the Lupton.
It's going to be, that's one.
Right. But so that's why the office market is such high demand. It's walking distance to shopping, retail, eateries, all that stuff.
Yeah.
So downtown Chattanooga, if you've never been, it's a great weekend destination. And we'd be happy to meet you up there and have a good time.
Yeah, we just did a company event up there where they have a 24-hour festival that's in their downtown area, literally right in front of a Lupton. We're racing tricycles around on the streets up there.
Drifting.
It was very fun. So it's a great town for that.
How quickly do you think that will lease up the Lupton?
So there's a difference between like leasing and when they're going to be fully economically paying. But our original goal and our belief still is once we're able to finish it and so we can have a building CO, it would take us about a year to fully lease the space and then get into burning off concessions and having people paying full rent.
Yeah, depending on the size of the lease, there's more or less concessions. If someone comes to us and say, "Hey, we want the whole building," we're usually pretty happy to give them 6 months, maybe even 9 months, maybe even up to a year of free rent. Versus saying, "Hey, I want 1,000 square feet in this corner of the building," you might get a month. So it's all negotiable depending on really what the demand is. Did I cover it all?
I think so. Let's see if any other questions come in. If there's anything else. Now we've got our shot of us all hanging out in our room here with endless amounts of computers.
The party shot.
So.
All right. Thank you so much, everyone. And we hope to see you in the next live stream. Take care.
Thanks.